Welcome to this video on balance sheet. I have named this video as balance sheet bird's view. Here we will learn a mental model which will help us to think about balance sheet in the most simplified fashion. Now let's talk about the nature of balance sheet. Balance sheet is a stock. If you recall in my previous video on income statement, I said income statement is a flow statement. What it meant was that income statement is created fresh every accounting period or every financial year. On the other hand, we say balance sheet is a stock. What it means that every sub account in the balance sheet shows cumulative value. What I mean by cumulative, all the actions which have happened in that particular account from the time the business originated or incorporated till date, all those details get captured in sub account in a cumulative fashion. That's why it is said that balance sheet is a stock. Moving on to synopsis now. Synopsis part 1 of 2. Balance sheet's one half shows total assets and the other half has two components, total liabilities and shareholders equity. Sometimes you will just hear assets, liabilities and equity. Here, just to start with, I have given you the full names. Total assets, one half of the balance sheet. Total liabilities and shareholders equity is the other half of the balance sheet. Now, like income statement, balance sheet will also have footnotes, which we all must read very meticulously to make sense of every entry in the sub-accounts of a balance sheet. This is a very important universal accounting equation which states that total assets of a business will be equal to the total liabilities plus shareholders' equity. Accounting of balance sheet follows double entry bookkeeping system, and that has three key elements. First and foremost, under this double entry system, every financial transaction affects at least two distinct accounts with an equal amount of debit and credit entries. Now, say for instance, a business bought a new machine and they have paid for it in cash. When they did it, the cash account of the business will be credited and the machine account of the business will be debited by the same amount. So in turn, the balance sheet total asset side will remain same and the total asset will balance with the overall total liabilities plus shareholders equity as per the accounting equation. Debit and credit in accounting simply means that which side of the account, whether left side or right side, we are doing the entry. Second key element of double entry bookkeeping system is that assets and liabilities must always be in balance. What it means that the total assets should always be equal to total liabilities plus shareholders equity. Here in a very simplified manner it is written as assets and liabilities. Now slowly we will learn why shareholders equity is a liability for the business, and we will also learn that how total liabilities are different than shareholders equity. So just hold on to your thoughts. When we move deeper into balance sheet discussions, we will look into it. The third key element of double entry bookkeeping system is it has 5 key accounts named as asset, liability, equity, revenue and expenses. Now in income statement primer, the last video, we talked about what is an asset, what is a liability, what is revenue and what is expenses. There is a new account here, equity, which we will take up in our subsequent videos. The final point I want to make here on this synopsis 1 of 2 sheet is that double entry bookkeeping system reduces bookkeeping errors. It ensures complete and transparent recording of all the business transactions. Next part of synopsis, we discussed that a balance sheet in the most simplistic manner would look like two blocks, one asset side, other one liabilities side, which consists of liabilities and equity. Here I have used only the most simplified names instead of total assets, total liabilities and shareholders equity. And we also know that balance sheet will have footnotes. Now going a bit deeper here, assets will have multiple accounts which come under various categories. I have named few of them like cash, account receivables, inventory, prepaid expenses, also known as other assets, or PPE, which is property, plant and equipment, and finally accumulated depreciation and amortization. What all these mean, we will learn in the subsequent videos of the balance sheet. Similarly, on the liabilities side, the key sub accounts are trade payables, also known as payables, other liabilities. The key element of that is accrued expenses. Then we have deferred tax liabilities. Then we have short term debt or notes payable. And similarly, counterpart of that is long term debt or notes payable. On equity side, we usually have two things. One is equity share capital, and the last one is other equity or retained earnings. Now, what are these different sub accounts? These we will learn one by one when we move deeper into balance sheet discussions. With this, I conclude this video and I hope to see you in my next video. Until then, best wishes.